Siddharth, we have you with us on the show, and it's your report which has been highlighting that how the early onset of the monsoon is impacting the pricing as well as demand. But Siddharth, cement as a play is very regionally distributed. There are select companies which are strong players in the southern region, select cater to the northern and the northeast part as well. Give us some understanding that what's your medium and long-term outlook on this particular sector. Along with that, which are your top bets within the sector, if you can flag it off for us?
Definitely. Thank you. Good afternoon. So if you look at the overall cement pack, I think this year we are expecting about 5 to 6% volume growth, and that which would be you can say a medium growth for cement as a pack. But what essentially we are also looking at is improving realization and lower costs. So a stable fuel prices and cost optimization efforts taken by companies across the board, that is helping improve profitability for FY26. So clearly what we see is that margins, even in last quarter we saw improving, but we expect that trend to continue. FY26 start, we saw a slightly weak start to FY26 due to unfavorable weather conditions, also slowdown of activities, which is now picking up. If you look at the government capex, that is now up in full stream, and hence demand is likely to improve. Companies which are large and pan-India based, for example, again Ultratech, which is the largest, is likely to sharply outperform the industry despite being the largest, with a volume growth of about 8 to 10%. And some of the mid-sized companies, for example, JK Cement, we are expecting a 12% volume growth, again almost double of what the industry volume growth is. So selectively, I think there are pockets where volume growth will be strong. Pricing pressure is relatively lesser, and hence we are seeing sequentially pricing improving. And finally, some of the cost optimizing efforts leading to higher profitability.
Okay, so that's the take on cement. Let's move away from cement for a bit. And Kunal, give us your sense on Nifty Metal, top sectoral gainer today. And year to date too, it's done pretty decently for itself. It's the third topmost sectoral gainer if you take a look at it on a year to date basis. We have some consistent moves coming in. So at least on the charts, how is Nifty Metal looking to you, and what are some names that you prefer from this pack?
In fact, this could be a breakout for metal index on the weekly chart specifically. So, assuming if we close on the metal index at 9,550 plus mark, where the index is right now, this could be a major breakout, almost like a 8-month or a 9-month breakout for the Nifty Metal Index, and this could augur very well for the entire sector, and especially the stocks which were waiting for a breakout, which were inclining towards a breakout, but the breakout was not coming out for many of the individual stocks in the sector. So I think this should probably act as a catalyst. Now, what we should be looking out for is the larger, the stocks within the entire metal pack which have done reasonably well. I think in that sense, Tata still ranks to be one of the better names. The stock has crossed back about the 150 plus mark quite convincingly, and now I think today, looking at the stock heading towards the momentum zone breakout of that 160 barrier also. Sale is something which has started to look attractive, especially with the breakout of that 130 mark. JSPL, Hindalco today is doing decently well, and the stock is completing a bullish flag formation. The only concern over here from the entire metal pack would be JSW Steel, which I would still believe could probably be a slight average performer to an underperformer, especially looking at the break of that correlation the stock had in the last 2 months when there was a very sharp correction for JSW Steel.
All right, so JSW Steel could be the outlier here, but other than that, the index on and whole is ready for a breakout and has already given one. But Siddharth, help us understand what, as per you, is driving this particular rally in the metal counters. But because when we look at some of these base metals, be it copper in the international market, yes, that is doing well. Zinc is a little volatile. Aluminium is not holding that well. Yes, it is going up, but in a staggered manner. So, other than this, what are the other factors as per you that could be driving this particular move in the metal stocks, as well as along with that also give us some sense that within the metal basket, any particular segment or any particular base metal that looks the best to you?
Yeah, so if you look at globally, two major factors are driving metals today. First is the dollar index, which has fallen below 97. I think that is driving positive sentiments for metals globally. While the base metal prices may not have moved up, but at least sentimentally, that is a big positive with dollar index coming down below 97. The other factor is that the US, the reciprocal tariff deadline is approaching fast, and they are yet to do any major trade agreement. So what we are also hearing news flows is that this could be renewed, or this could be the current uh, tariffs could be extended. So the window could be extended, which could mean positivity again for economies like China, where the demand is largely driving the metal prices. So these are two global factors which are driving metals. If you look at from a domestic perspective, ferrous, we believe would be largely positive. Within that, Jindal Stainless and Jindal Steel and Power. These are our two preferred picks where we see upside of 20% upwards. While on the non-ferrous side, Hindalco is our preferred pick. We have a buy rating and a target price of 790 there. That apart, if you look at again copper and zinc and silver prices, that is moving up, and towards to benefit that, one can also look at Hindustan Zinc or a Vedanta as a tactical play.
Dollar index, how can I forget that? That's been one of the key indicators. And yes, the kind of slide that we are seeing is indeed fueling the rally in the metal counters. But so does that mean that some of the other related sectors or correlated sectors with respect to the moves of dollar index, be it pharma or IT, can they take a back seat for some time?
IT, I think there have been several other factors. While the US rate cut is now eluding, with Fed saying that they will wait for the tariff impact to take place. I think the tax cut in US, that could be a big positive for the discretionary spending on the tech side. Even overall, we are seeing that while the large cap IT companies are still struggling with the new order inflows, the order book is pretty strong for tier two IT players which are present in niche segments in the digital AI segment, and there we see strong growth. So purely in the IT, I would say yes. Overall view is a bit of underweight, but selectively look at tier two IT companies like the likes of Coforge and Persistent, which have a very strong order book, very strong execution, and are plays on the digital as well as the AI Gen AI space. So clearly be selective there.
Okay, so that's the take, but let's move away from that and talk about some BTST closing trades coming in from our technical experts. Kunal, you go first.
So, of course, I think looking at the way the markets have been structured, I will go with buy calls on a couple of names. Reliance Industries is something which looks attractive on the larger cap front, especially with the stock now nearing a breakout of the 1500 mark. So 1540 as a target, stop us at 1460 for RIL, and the other is ICICI Bank. The stock has been a slight underperformer, but I believe with the banking index showing signs of breakout yet again, ICICI Bank could make a very strong comeback. So would suggest a buy with 1490 as a target, stop us at 1420.
Okay, so those are Kunal's preferred bets. Jatin, what about you? What's looking good today?
Yeah, so we also have two recommendations on the buy side. First recommendation is ICICI Pru Life Insurance. So it has broken out from a triangle pattern on the upside. We believe that the next leg of the up move can take the stock higher towards the level of 677. So that is a buy with a stop loss of 636. Apart from that, the capital market space is buzzing. So BSE is a long trade. BSE can be bought after a brief pause in the last couple of trading sessions. We believe that there is a scope for a up move towards 3000, 3030 for BSE. A small stop loss of 2760 is suggested for this long trade. So BSE is a long side trade.
Okay, so those are the picks that Jatin is liking at the moment. Kunal, you've picked out ICICI Bank as your pick, but what about HDFC Bank? You know, fresh all-time high coming in for that stock. For the first time ever, it's crossed that 2000 mark. Is this going to make it to your list ever?
Yeah, I think HDFC Bank is also something which I'd actually flagged off in terms of, or had selected in terms of the closing trade. because I think this is a big breakout for HDFC Bank. It's not just a breakout of a psychological 2000 mark or a round figure 2000 number, but it's a breakout of almost like a 3 month or a 4 month of a major consolidation for HDFC Bank. And the stock looked to come back into its prime somewhere at the start of 2025, where the stock moved from those 1700, 1750 levels as a bottom towards 1900 mark, then consolidated over there for 2-3 months approximately, and now the stock is confirming a breakout. So this potentially could be a major swing breakout as well as a flag pattern breakout for HDFC Bank. And now I think one should be looking at not just the momentum accelerating over here, but the stock to scale past about much higher levels from current zone. This could also be one of the other positive factors for the markets, because HDFC Bank has a high weightage both on the Bank Nifty as well as on the Nifty. So the direct impact would be felt on the much positive side for both the indices.
So that's about HDFC Bank, but once it's stock within the telecom space that has been doing well at least for the past 3 days, that is Vodafone Idea, as the company aims to raise fresh capital of $2.9 billion in loans. And on the back of these particular news, as well as the commentary coming in from Telecom Minister, where he's highlighting that he can't have a duopoly in the system, maybe such comments are boding well for Vodafone Idea. But on Vodafone Idea as well, we spoke with Balaji, who is Balaji Subramaniam of IFL Capital Services. Let's go across and listen into his take.
There has to be some relief from the government side, while the company would concurrently reach out to lenders, because the company ideally, if you are Vodafone Idea, you wouldn't want to leave any stone unturned, and you will keep the efforts from your side. But that said, I think for banks to get really comfortable, some relief measure announcement has to come from the government side, because if any lender is looking at potentially lending to Vodafone Idea, I think the first logical question that will come up is, how is Vodafone Idea going to get past that hump which I mentioned, which is the 16,500 crores which they have to pay up by 31st March 2026. So, unless clarity emerges on that front, I think banks will still be a bit reluctant, and that is how I see it. But of course, the company will continue engaging with the banks, and so it has to be some sort of a effort from all three parties, which is the government, the company, and the lenders, especially the PSU ones.
Okay, so that's Balaji's take on Vodafone and the loans that are looking to seek. Remember, they already have 83,000 crores worth of AGR dues pending, and the company has said that they haven't received any official communication from the government hinting at any respite coming from that end. So that's on Vodafone. A couple of other stocks are in focus in today's trading session and are doing well. The likes of Hindustan Copper, again from the metal pack, that's doing well. Some other stocks from metals are doing well. You have bank, energy, FMCG, all of them are doing pretty okay for themselves. On the flip side, what's not doing good is a couple of these fertilizer stocks that we have seen some momentum coming across to them. Jatin, give us your take on some of the fertilizer names like FACT, RCF. You have news flow on RCF as well today. What are you making of this entire fertilizer space?
Some of the stocks of this group like Chambal are not doing well. Apart from that, Coromandel is doing well, EID Perry is doing well. So I think there is a mix of these stocks like fertilizer. So I would rather look at it from a stock specific perspective rather than looking at it from a sectoral perspective. Within this space, we like Coromandel International from a short to medium term kind of a trade. I think that is not doing well today in today's trading session. So as of now, I will avoid this space until we get a further clarity.
On the fertilizer space, select counters are looking good, but overall, avoid is the call coming in from Jatin. But once it's stock that is doing pretty well, and for the past 5 days, if I see that stock is on the up move, that is Geo Financials. And Kunal, if I'm if I'm seeing the charts as of now, after the stock did cross that 300 odd mark, it is actually post, I think 3rd of Jan is what the stock is hitting such levels. Give us some sense that how do you see the up move?
Yeah, this is a very big breakout for Geofinance. In fact, rarely do you see such kind of a V-shaped price correction and then a major recovery for the stock. And remember that Geofinance it was earlier considered to be a very moderate beta kind of a stock. But then there was this sudden change of behavior. The stock from 340 fell down to as much as 200. I think 200 or 205 was the low for Geofinance, and that's a sharp correction of almost 40% for the stock from its lifetime high levels. And post that, the stock to make a comeback about 300 mark, recover almost 60% of the losses. I think that's a remarkable trend for the stock. I flagged off Geofinance a couple of days back as a buy. My expectation was that the 200 DMA, which has been acting as a support for Geofinance, that would be probably a major inflection point in the stock. If it holds on to that 200 DMA, we would probably expect the stock to come back into momentum. So it's come back into that momentum zone right now for Geofinance, and my expectation is that the stock would start to look even better from current levels. My expectation is that 340, the levels which are hit for Geofinance in the previous year, those levels should be surpassed if this momentum continues for the entire market.
Okay, so that's a take on Geo Financial. Just a short while ago, we were discussing the dollar trade or the dollar index, and we have more perspective on that from an interaction we had earlier in the day, because the uncertainties in the US policies is pushing investors to diversify their portfolio and not be restricted to US assets. This is the word coming in from Khungo of the ANZ Group. He also talks about the future of the dollar. Let's go across and revisit that conversation we had with him earlier in the day.
Policy making as we have witnessed in the last few months. So that has caused foreign investors to rethink whether or not they want to continue to have such a large allocation to US financial assets. And the answer overwhelmingly is they want to reduce that risk. And that's really the key reason why we've seen weakness in the dollar. The dollar will still be an important reserve currency. I think we are coming to a more normalized period where we're going to see probably further downward pressure on the dollar as global capital gets reallocated to other parts of the world. Global central banks have been behaving. It's quite clear that they themselves are also looking to diversify away from the US dollar. And gold, of course, is one of the ways that they can do that. We've seen a lot of central banks around the world, particularly those in emerging markets, increasing their gold reserves.
All right, so that's the day coming in on dollar index and how the other commodities are behaving at this point in time. But Siddharth, just before we shut shop in today's trading session, and today is also one of those monthly expiry days, and this expiry has been decent for the markets because for the majority part we were quite range bound. Just in the last 2 days we have seen a breakout happening, but there has been a lot of sector churning underway. Give us some sense that in terms of the sectors which can be the outperformers in the near term, help us understand that. Metals and IT and pharma we have already spoken about, but what about the rest?
Clearly, I think the biggest gainer or movers for the market would be the financials, including banks. I think BFSI is the largest beneficiary of the low interest rate regime and the liquidity boost that RBI has been pushing in last couple of months. Even the recent regulation which have relaxed for small finance banks and for the project financing companies, I think those are steps which would only improve the liquidity and lower the cost for NBFC. So I think that is one space which will continue to do well. That apart, if you look at the domestic consumption theme on back of again low interest rates, the above normal monsoon, rural sector picking up, I think some of the auto companies, especially if you look at two-wheelers, that can start doing well. So I think these are some of the other sectors to look at purely from a domestic growth perspective.
Okay, so those are the bunch of sectors that are looking good at the moment. But before we wrap it up, Jatin, what are the immediate levels that you see for tomorrow? Where do you believe we'll open?
Oh, definitely. I think we'll open on a positive note. The immediate resistance that we can expect is around 25,700 50, which coincides with the weekly upper Bollinger Band. So I think there we can face some amount of resistance. So overall view is positive. We are likely to open on a positive note tomorrow.
Kunal, what about you? Levels to watch out for tomorrow?
I think 25,500, that level is broken today, so we should now be looking at 25,500 as a base or a support. It's a little bit tight, but then I'd probably expect if the markets open with a gap up, then that support should hold on. And on the upside, 25,800 is what I would look out for in terms of the index targets.
All right, so 25,500 should act as a base from these levels. So let's watch out for that. But well, of course, today has been a great day for the market, especially the banking index. A lot of these metal counters have done well. But one such other pocket, Siddharth, quickly, if you can help us with your take, is the FMCG basket and especially the staples. Yes, so we are seeing some bit of these agri-related commodities. They are cooling off in terms of the prices. But any particular pocket or stock, if you can help us understand that which is looking good to you at this point in time?
Yeah, so I think definitely that's one pocket which has largely underperformed. And if you look at again, the volume growth has been pretty dismal. Going forward, things are looking up, but in Q1 also we expect a muted volume growth for the FMCG staples companies. So hence, clearly an underweight view from a near-term perspective. Some of the companies that we do like are more diversified. Are, for example, Tata Consumer is something that we like. Has a broad-based basket of products across food as well as the consumption sector, where we believe that demand could pick up and valuations are also comfortable. The other company that we like is Godrej Consumer, GCPL. Largely, if you look at based on soaps and with crude oil price coming off, largely remaining stable. On the margins front looks pretty steady, and in terms of growth also looks pretty steady. So two stocks we like: a Tata Consumer, where we have a buy rating target price of 1360, which is our preferred pick. Godrej Consumer, again, we have a buy rating target price of 1450, both giving an upside potential of more than 20%.
Okay, so those are some of the stocks, Tata Consumer and GCPL looking good to Siddharth right now. Siddharth, Jatin and Kunal, thanks so much for joining us on the show.